let's talk about using a contingency order. So I've got a chart here of BSX off of this week's scouting report. We've got a pull back down into the known support resistance zone. We got a couple of signal candles. We don't yet have a confirmation candle. So we want to see prices start to rise. And according to the bullish watch list here, BSX, we want to buy it if it goes above 42.71. So we need to wait for the price to go above 42.71. We want to put stop losses down below 42.25, and we can probably target 43.60 to 45. Okay, so we got some price criteria. And again, we can use those to help guide us. Of course, we expect you to use your own price criteria. These are simply suggestions giving you a kind of minimum, maximum. Don't go, don't trigger before this. Don't use stops tighter than this, just because that's kind of a game of probabilities according to the step method. So if we wanted to go in and place a trade on this, and I wanted to buy an option, for example, in lieu of the stock. Let's say I wanted to buy a call option, and I need to use that confirmation. I can use a contingency order. So I can say, well, I'll buy this if it goes above 42, say 75 or higher. And I could say, okay, well, I could look at, they've got lots of options here available. I'm going to buy longer term options for November. That'll give me 130 days until expiration. And a good typical rule is to buy, right near the money, at the money, in the money. The general rule is to buy a delta of 60 or better unless you're doing some sort of out of the money gamma scalping and you're more experienced. So if I wanted to buy this $42 call and the current rate's $3.15, and I don't know exactly what the premium is going to be if it trades at or above that 42.75, because the stock price will have to go up 25 cents. So I can click on the asking price here, and I'm okay with the general ballpark of risk. If I'm willing to risk, say, $400 or less, I could probably use this contingency order and say, okay, I'm willing to buy this, and I'm going to come over here, and inside of the Thinkorswim platform, they have this little cog wheel over here that pops up. You can click on that, and it opens up a contingency order ticket that allows me to specify price conditions. So I can say, hey, only get me into Boston Scientific if the mark, which is the difference between the bid-ask spread, or I could choose one of these other criteria, but I'll use the mark, is greater than or equal to that 42.75 trigger price. So I say, hey, if it goes at or above 42.75, let me make sure I got that number in there right. So 42.75. I can then say send in a limit order, and we'll link that to the mark price, the mark of the bid-ask spread, and I'll say, and don't spend more than 5 cents more or 10 cents more than the mark price, the middle price between the bid-ask spread of the option, when this price contingency or criteria is met. Now, there's many, many ways you can use contingency orders and different criteria you can put in there. You could put in a timestamp and say, well, I only want to submit this order tomorrow, and I could do that. Or I could say I want to submit this order, on a specified date. I could specify the time. I could specify other conditions or criteria, or I can change any of these others up above. And if you really want to make sure you're getting it right, read this description down in here on the contingencies. They give you an English description. So this says, hey, submit the following order: buy one BSX 100 shares, the 15th of November 2019, $42 call. And it'll say submit it at the current timestamp. If I take that off, that'll come out, and it won't give me the timestamp. And then it'll say is that when the ask is at or below the market price on the security when the order is submitted, plus 5 cents, i.e., when the order is issued, its price is set to the mark price on the instrument at that moment plus 5 cents. The order is valid only for the current trading day. So I may need to make that order good till canceled. Now, okay, I got it good till canceled. Okay, wait until the following condition is satisfied. Mark price of the security is greater than or equal to, oops, it looks like it didn't stick on the price. Let's make sure we got that. 42.75, and we are good. Okay, so now I'll save that order ticket, and I'll go ahead and hit confirm and send that in. And when we go look at the chart here, the price is going to hang out with the current market price. It doesn't know where to go. But we have to point to the little price ticket here, and that'll show us the contingency, and you'll read the contingency. It says when it's at or above 42.75. So contingency orders can be used to buy or sell, can be used with options, stocks, and other instruments. And you can set additional criteria to help you control at the prices and conditions at which you enter and exit trades.